Dear ladies and gentlemen, salam. My name is Florian Vanek. I have been working for Vienna Stock Exchange already for 27 years now, so it's really a long time. 11 years ago, in 2006, I was standing on the summit of Mount Damavand, visiting also Shiraz, Caspian Sea, and I would never have thought that I will, 11 years later, be at this conference and speak in front of the most important listed companies of Tehran Stock Exchange. What I will cover today is, on the one hand, listing of shares on a European market, but mainly I will cover bond issues. By the way, my topic on Vienna Stock Exchange is bonds, and I have the nickname Mr. Bond, but without James. Let me introduce you Austria as a country at a glance. Austria is, compared to Iran, a relatively small country in the heart of Europe, and it is a neutral country. We are not member of NATO. We have good relation to all countries. Austria is a small country also concerning inhabitants. We have fewer inhabitants than Tehran has. So Tehran, I think, 10 million about. Whole Austria has 8.5 million people. City of Vienna is almost 2 million people living there. We are a small country, but we are very strong in our economy. We have a low unemployment rate. We have a lot of exports to Western Europe, also to Eastern Europe, to Russia, to Arabic countries, and also much growing to Iran. Vienna is also the headquarter of international organizations like UN, and also many headquarters of European groups, and also international groups have a headquarter in Vienna. Let me introduce Vienna Stock Exchange as a company. Our market capitalization is about 120 billion euros, so it's about the size of Tehran Stock Exchange. We have 380 shares listed on Vienna Stock Exchange, more than 3,000 bonds, certificates and warrants, and what is very important are the trading members. Trading members means banks and brokers who can directly trade on the stock exchange. And from these 78 trading members, 50 are international, like JP Morgan, Morgan Stanley, Deutsche Bank, Credit Suisse, and so on. And they bring a high liquidity to our market. Moreover, we calculate a lot of indices, not only our main stock exchange index ATX. ATX is like the DAX in Germany, but also indices for Eastern European countries, for Russia and so on, and we sell these index licenses to banks. And we are also a data hub for Reuters, Bloomberg and so on, for many smaller stock exchanges, especially from the Balkan region, because they are too small to connect directly to these data hubs. Yeah, let me go into the topic concerning shares. I have here an abbreviation list standing GDR. What does GDR mean? It is General Depositor Receipt. I will come to it on my next slide. A lot of companies from Russia, from India and China, they made a dual listing in Europe, but mostly not the shares directly, but via GDRs. I said I will come later to the topic GDR. And these GDRs are listed partly in England, in Luxembourg, and in Germany till now, and hopefully in the future also on Vienna Bourse. Why do Russian or Chinese or Indian companies have a listing also on European markets? Very important is the visibility of the issuer. If you're listed on a European exchange, you will be visible to institutional and also retail investors on the European market. And don't forget, the EU consists of many countries, but the European capital market is a harmonized capital market. So the capital market is even one of the most harmonized issues in European Union. So we have almost the same rules for all the topics, and if you are listed on one exchange, all investors, all the banks from other European countries can buy on this exchange. Listing in Europe means also an attraction of European investors, which is very important if you make a capital increase, because the dual listing does not bring you new capital. But when you have a capital increase, then new capital flows into your company, meaning that you get capital support also from European countries. Also very important is that certain institutional investors in Europe, institutional investors like insurance companies, investment funds, for example, they have the requirement to invest mostly on a so-called regulated market. If the share is listed on a regulated market, then the institutional investor is allowed to buy this share. If it is not there, he cannot. And you might ask, to which stock exchange should I go? There are so many stock exchanges in Europe. To go to the next slide. When I started at the exchange 27 years ago, each country had one stock exchange. Even in Germany, there are still regional stock exchanges existing. But now the world has changed. We have 3 major blocks of stock exchanges in Europe. The first block is the Euronext. Euronext is the combined stock exchange of France, Portugal, Belgium, and the Netherlands. It is one stock exchange, so meaning Belgium does not have an own stock exchange anymore. It is part, the office in Belgium is part of the Euronext. Second block is Deutsche Börse, German stock exchange, in cooperation with Vienna, in cooperation with Ireland. We are independent exchanges, but we use the same trading system T7 now. Before it was Xetra. T7 is new since September. The third largest block is London Stock Exchange. They bought Milano in Italy. So Milano is not independent anymore. It's a part of London Stock Exchange. And the fourth strong block are the Northern European countries. These stock exchanges merged many years ago to OMX Group, and OMX itself was bought by Nasdaq from New York. Which countries are still independent or without cooperation? It is Spain, which is really on a standalone basis. These are the Balkan stock exchanges, but they are in reality not important. They have very The turnovers there are very minor. Greek stock exchange is independent, and from the Central and Eastern European stock exchanges, the Polish stock exchange is the most important one. And you might ask, well, when we list on the European stock exchange, on which should we list? And I say there's a general criteria too. Take a stock exchange with a state-of-the-art trading system, like T7 from the German exchange, which can execute many 100,000 orders within a few seconds. And then look if the stock exchange has a lot of remote members or not. Remote member means not national but international banks who can trade directly on the stock exchange. The more remote member a stock exchange has, the more liquidity is on the markets. The next topic is to distinguish between a regulated market in the EU and the so-called exchange-regulated markets, also called MTF. MTF stands for Multilateral Trading Facility. You might ask, what is the difference, or why are there two kinds of markets? Regulated markets, and they are same in all EU countries with the same regulations. You need a prospectus to enter a regulated market. This is the main difference in contrast to an MTF exchange-regulated market. You need IFRS accounting for regulated markets. You need annual financial statements 4 months after the finishing of the financial year, and you need half-year financial statements 3 months after the first 6 months of the business year. This is the same in all EU countries. Regulated markets, regulated, why? Because regulated from EU side. So the stock exchange cannot change any requirements here. You cannot negotiate with Athens, or if you want to go to Athens, say, please, can we have our financial statements just 6 months later? No, it's not possible. It's equal in all European countries. The exchange-regulated markets, here the stock exchanges have a lot of freedom to establish their own requirements, and there are major differences between these exchange-regulated markets. In Vienna, our exchange-regulated market is called third market. We are now currently very, very successful with international listings, especially from Italy and Ireland, because we have customer-friendly regulations on the MTF. And below the regulated market and the exchange-regulated market, you find, as an example of Vienna Stock Exchange, the market segmentation. Prime market, for example, here some companies are willing to do even more than EU regulations want from them. Global market, this is our new market segment for global shares, are now coming from Germany, France, US stocks, and maybe in the future, hopefully, Iranian stocks or CDRs. I must apologize, this is a little bit too small, I think, to read, but I will not go through all the details. Here I stated what is essential for admission. Admission means that the stock exchange accepts you on the market, and what are the ongoing obligations. As I said before, the crucial thing for admission on a regulated market is a prospectus. A prospectus, according to EU regulation, it's the best way is to write it in English. And when you have one prospectus approved from, let's say, the Irish regulator, you can passport it to all countries, and it's valid in all European countries for an offer of shares or bonds. The ongoing obligation for shares, I've just mentioned before some of them. What is also very important is the so-called MAR. It's a market abuse regulation. I recall market abuse regulation. It is new since July 2016 and has changed the markets quite a lot, because ad hoc disclosure is obligatory for all listed issuers. Doesn't matter if listed on a regulated market or on an exchange-regulated market. What is ad hoc disclosure? When there's a price-sensitive information, let's say an oil company, you find a new big field with oil which could bring billions of euro income in the next years. As soon as it has been found, the company is obliged to tell this to the public immediately in order to prohibit insider trading. Insider trading is a sensitive topic in Europe, and also, you know, even more than in America, because insider trading is not fair and it harms the capital markets. So ad hoc disclosure means as soon as an insider information is found, it has to be published immediately by the company to the public, to Reuters, Bloomberg, and so on. This is new for all markets now. This is a slide from our trading system, just to give you an idea how trading looks like. This is trading of OMV, is the Austrian oil company and petrol company. It's one of the most liquid shares on the Vienna Stock Exchange. And on the one hand, bid means buying orders, and ask means selling. And here you see all orders for buying and selling on the electronic order book. This is an electronic order book, so we have, like most European stock exchanges, electronic trading, no floor trading anymore. And this is really a high liquidity, just to show you how it looks in reality. Before, I showed details of the regulated market. Now I show some details which have to be met on the MTF, on the stock exchange regulated market. The admission is very easy. You even do not need a prospectus in Vienna for an MTF, neither for shares nor for bonds. We just want as kind of information memorandum, but which is not published. For example, in Austria, we can publish it. And for example, Luxembourg, they require a kind of prospectus. So it's really different between the stock exchanges. There's no minimum period of existence for the normal MTF in Vienna, so you can list securities from so-called newcos, new established companies. And ongoing obligations, as mentioned before, is just the MAR, the market abuse regulation, and nothing more for the MTFs. So you see, it's very easy to enter an MTF, especially our MTF in Vienna, but it's a lot of work. Just these are formal things, yeah. Please distinguish. Investors demand a lot, but just the sole listing is easy. But investors want, of course, more than standing here. So the one thing is what investors, to meet the requirements of investors. The other thing is to meet the requirements of the stock exchange. I was talking before of price-sensitive information, and here I got some more examples, especially if the profit of the company is sharply rising or falling, or if it differs from the forecasts, then it is time to make an ad hoc disclosure, to tell it to the public. Also, of course, new products, for example, if you have a new invention and get a new product, or big size orders. Mergers, takeovers of, for sure, price-sensitive information, meaning when you take over competitor, then it's, of course, it will influence the price of the stock, and then you have to tell it to the public. Especially for bond issuers, default or potential defaults have to be reported to the public immediately. And sometimes even management change. I talked at the beginning, can you list directly shares from Iran or on a European stock exchange like Vienna or not? Listing, yes, but the topic is not only listing, it's the clearing and settlement procedure, which is not so easy because you have in Tehran a central counterpart and a clearing system. We have in Europe Euroclear, Clearstream as international clearing systems, and then a lot of national clearing systems too. So it's really not so easy. That's why the Russian companies and the Chinese companies, they prefer, as mentioned at the beginning, issuing via a GDR. What does it mean? A GDR is a certificate issued by a bank and just representing the shares. So the shares themselves are not listed, but the certificates issued by, let's say, UniCredit represents the shares. So it's an indirect way of investing. The bank, let's say in our example UniCredit, they hold the Iranian shares in trust of the investors. And one big advantage, the GDRs are denominated in the European local currencies, so in euro, not in any other currency, not in Russian rubles, not in Chinese renminbi, and so on. And the investor, the final investor, the people who hold the GDRs, they get the normal dividends because you as Iranian companies, you pay the dividend and to the holder of the GDR, UniCredit, and UniCredit then gives the dividend to the final investor. So it's the best way normally for share listing of non-European companies. Let's turn now to the bond market, which is, I heard, even more interesting for you. As mentioned, we have about 3,000 bonds listed on Vienna Exchange. Most of them are from the financial sector, so from banks issued, from Austrian banks. We have about 430 corporate bonds on Vienna Exchange, but most of the issuing volume, of course, is from the public sector, Austrian government bonds, because we have a high indebtedness in Austria, higher than Iran. Most European countries have a higher indebtedness than Iran. That's really appreciate here in this country that you do not throw the money out like we did in Europe many years ago. And now we have to save a lot of money. Here you see just the number of international bonds coming to Vienna Stock Exchange has sharply increased. There were 48 international bonds in 2013 coming to Vienna, and 154 last year, so 200% more, and we expect more and more every year. Especially, I said before, our the best clients who come from from the international side are Italy and Ireland, and some already from Spain and some from UK, and hopefully from Iran in the future. Here's some well-known companies who have listed, from Italian companies who have listed bonds on Vienna Stock Exchange. The football club AC Milan, for example, the one who are interested in football, I think you know this club. Davide Campari, okay, not available here in this country, but Astaldi, a big construction company, Telecom Italia, for example, 1 billion bond listed on Vienna, Telefonica from Spain, also 1 billion convertible bond listed on Vienna Exchange. And last year, Bayer from Germany brought a 1 billion convertible bond to Vienna Exchange. So you see, we have on the one hand small companies, but on the other hand really high reputative companies listed. This slide I have already partly explained before. When you want to issue publicly a bond in Europe, publicly means you offer it to the public. Every issuer needs a prospectus. And this prospectus has to be accepted by one of the European financial market authorities in Austria before you have the right to offer it to the public. There's the free choice of the financial market authority you might take. Normally issuers take Ireland. They are they're the fastest for prospectus approval. But finally it's a choice you can take in connection with the bank and law firm who gives you legal advice. There are also some prospectus exemptions for issues. So some issuers say we don't want to write and publish a prospectus. If the denomination of the bond is 100,000 euro or higher, then there's no prospectus requirement for a public issue in Europe. And this might be quite good if you want to sell a bond to institutional investors, because they buy in these high denominations. You can publish without bonds. Maybe the investors will require the prospectus, but this is another matter. But just from the legal side, you don't require a prospectus then. And also if you offer to qualified investors and not to retail investors, you do not need a prospectus. So these are more or less than private placement. When I was sitting in Vienna and thought which message I can give it to you, which most interesting message, and I think it is this slide. I thought, how can you easily access European investors? And to my mind, it is the best way to establish a special purpose vehicle, and the abbreviation is SPV, Special Purpose Vehicle, in a European country. And this special purpose vehicle does not do any business instead of issuing the bond and giving the proceeds from the bond to the Iranian company then. Why doing this? First, some or many European investors, they might have restrictions buying directly Iranian bonds. But when it is an SPV in Europe, then it is a European issuer. Second, it's again the clearing and settlement matter, what I was discussing before concerning the GDRs. Typical countries for SPVs where the jurisdiction is very easy to set up an SPV are Ireland, Malta, and Cyprus in Europe. We get in Vienna a lot of Irish SPVs listings. Cyprus might be good if you want to get Russian investors, because Cyprus has a tax treaty with Russia, and many rich Russians have parked money in Cyprus. So Cyprus might be good for Russian if you want to reach Russian investors. Malta is also good because they have the jurisdiction is rather easy for SPVs. But according to my experience, Ireland is the most sophisticated country and most experienced country. To give you an example, Southeast Asian Airlines, when they want to have new aircrafts, they set up an SPV in Ireland. This SPV issues large bonds. With the issuing proceeds, they buy the aircraft from Boeing or from Airbus, and then the airline leases the aircraft from this SPV. We have on the Vienna Stock Exchange quite a lot from these constructions. It might be a solution for Iran Air, for example, to do it like that. There's another advantage for the SPV issuing, because the ongoing disclosure is quite easy to fulfill, because the SPV does not do a lot of real business. So the ongoing requirements are restricted to the SPV, of course, only. Yeah, this I've already talked about, easy access to the third markets in Vienna. And we have a straightforward process for listing. The planning period means a law firm contacts us and we talk about the project. And we say, okay, it's an SPV or it's the oil industry and something. We want to see a draft information memorandum for the third market. And as soon as we say the information memorandum is okay from our side, you submit all the required documents, and then the listing process takes maximum 1 week. So it's really a straightforward process when all the things are prepared. Yeah, and last but not least, our prices are very small for bond listing. It's on the third market 1,900 On the regulated market, 2,900 one-off listing fee, and the annual fee is even, it's not to be mentioned, 200 or 300 euro per bond per year. Thank you for your interest. Thank you joining the conference, and I am available for any questions and hope I can fulfill your requirements.
Thank you so much. Thank you so much for coming all the way from Vienna, Florian. I know it's a technical subject. I learned that denomination above 100,000 euros needs no prospectus, so that's what I'm going to tell my clients here. We just want to wrap up quickly. I just want to ask if there are any questions. We might want to do it after the snack. اگه سوالی داشتیم میگیم یکی یا دو تا سوال بکنیم، نه چون ما بعدش میخوام بریم با هم دیگه اینجا هستیم با هم دیگه در اسلک، نه بگیم دو تا سوال از شما بفرمایید. های گوشی رو لطفا میفرستیم اونجا. بفرمایید.
Thanks you for your presentation. I want to know, you mentioned the time required for listing, for example, it could be even 1 week. I want to know how the infrastructure, which infrastructure is needed here. You mentioned about the presence of global custodians here. I want to know with regard to their preferences, that they do not want to be here, I mean the global custodians. Then is there any possibility to have other custodians or other firms that can serve us for issuance of, for example, GDR or dual listing?
Well, concerning bonds, that is why I recommend to establish an special purpose vehicle in Europe, because then you don't have this matter with the custodian, because an European special purpose vehicle, of course, it is accepted by a European custodian. I think the best is then a local custodian. For example, in Malta, I know they are very open. Concerning GDRs, this is one topic I cannot answer here. It has to be clarified from banks or law firms or consulting firms, because till now on Vienna Stock Exchange we haven't had a lot of GDRs. I just wanted to show you the way it can work.
Thank you.
We'll take one more question.
Yeah, here.
Many thanks for your presentation. It was very insightful and technical indeed. As Kaveh mentioned, that the possibility of working with Europe and Asia, especially China and Russia, is high for Iran. And we have seen in your presentation, your colleagues' presentation, about the challenges like anti-money laundering or IFRS or compliance, many other issues. We didn't see anything pertaining to convertibility and swap of currencies, because investors, as it's very fundamental, pertaining to infrastructure of issuing of international bonds or sukuk in markets, convertibility of the currency, the issuer currency to to investors' currency, say Iranian rial to euro or other currencies. I didn't see anyone address this issue, and do you have any idea how to tackle and address this issue, the issue of swap and convertibility of Iranian rial with any denomination that is going to be issued in international markets? Thank you very much.
So you mean when an issuing vehicle in Europe issues euro bonds and you need a swap into your local currency here?
Yes.
In rial.
It's favorable and is demanded by investors. They like to, to see the convertibility, and swap is already there.
Well, the swap is something the bank does. It is not, the stock exchange is not involved at all in swaps.
When it comes to bonds issuance or sukuk issuance, I've negotiated with many international banks. They want to see this in place. I don't know whether you have seen this issue working with other countries who want to enter into Europe through Vienna Stock Exchange or not.
We have for one sukuk listed even in Vienna, but the swap is something behind the whole structure we do not see. Do you understand? Because what we see as stock exchange is a euro bond, but we don't see if you swap it into another currency.
So I mean, if we don't address this issue, fundamentally we cannot proceed, because it's very basic requirement for issuing international bonds or.
That is why there are many parties involved in transactions. Not only the stock exchange, it's also the rating agency and consultants, because every one of these parties has a task, and the task of swapping from one currency into another. This is the task of a bank which has to be involved. I know I cannot give you now a solution. I'm sorry, but because it's not.
We're not expecting Vienna. We're not expecting the Vienna Stock Exchange to solve every problem. But yeah. Thank you.